Good evening, everybody. Welcome to tonight's program. We're going to talk a little bit about the what's happening in the real estate market and some of the impact of the war with Iran and what that has done to the market. So, without any further ado, if you can hear me okay in the chat, let me know, and we'll get started on tonight's program. Looks like we have some folks already in the chat. So we have MHO8 Nice Flames. Okay, yep. And oh, Sam is saying he's first. So Sam, welcome to. Sam is on my team now, so he's also a moderator as well. So and we have Leslie G. Hi, M8OH. And all the way from Las Cruces, New Mexico. All right. And then Leslie says it sounds okay. Terrific. All right. So we're going to be talking. We're going to share an article tonight and kind of go through it and kind of talk about it. And I have a subscription to HousingWire, and I really like that website because they give. There's, you got to be careful with some of these places where you get your news, because sometimes it's just like, okay, I know for a fact that is not a reliable source. So anyway, I'm going to share my screen with you. And again, this is from HousingWire, and it's from Logan Motoshami, who is a analyst for HousingWire. But it says housing demand still growing as mortgage rates reach an inflection point. All right. And we got, okay, terrific. Clark, we can start the program now. You're arrived. All right. Excellent. All right. And with the war in Iran escalating, we now have a clear pathway to the 10-year yield hitting 4.6%. Okay. Here's the thing about whenever you do an article like this, everything is changing so fast. So I thought, you know what? I started planning out my stream yesterday, and I thought, you know what? It might be a good omen. Maybe the war, maybe things 24 hours in the current news cycle, a lot can change. So, but we're still in the war, and it's still going on. But why the 10-year yield hitting 4.6%, why that's important is because mortgage rates track the 10-year treasury yield. Okay, so that's why that's important. Okay, it says despite higher oil and gas prices, higher mortgage rates, and no indication that the conflict in Iran is ending, existing home sales still posted another positive week. However, with every week that goes by, with mortgage rates above 6.25% and heading higher, it gets harder to maintain that growth. And housing data in the past hasn't performed well when mortgage rates pass 6.64% and then exceed 7%. However, for last week, the demand was fine, even with the crazy headlines we had. This week is going to be critical because I have maintained that if this crisis lasts past March 21st, everyone needs to revise their housing outlook, as rates being higher for longer is in play now. Okay. And just to kind of show you where rates are at, we'll look at the 30-year fixed rate mortgage. Okay. And this is from Mortgage News Daily. Okay. And this is what, if you look back, I think we went to war the weekend of March 27th, okay, on a Friday. And then what has mortgage interest rates done since then? They have shot up. So we were, February 27th, rates hit a low of 5.99%. And now we're at 6.55%. Now that's more than a half point, but a half point means a a lot in the world of finance because that affects your payment. Okay, um, just to give you some idea about that is I did a little. Um, I'll share this with you too. Okay, this is home prices versus interest rates. Okay, let's take for example, you have a $425,000 house with 20% down. Is $85,000. Not every person has to come up with 20% down. There's just different programs out there. But in this case, I just use an example of 20% down. So that's $85,000. A 30-year fixed rate mortgage at 6%, your payment, and this is just principal and interest, would be $2,038 principal and interest. Okay. Now, I wanted to point this out because I know there's a lot of folks that say, well, it's all about home prices. It's never about interest rates. Well, it's always about terms. It's never about price. Okay. I disagree with that because let's say there was a 10% correction. Okay. Let's say there was a 10% correction. So that $425,000 house is now at $382,500. That's a 10% correction. Okay. So if you were going to finance that, you'd be coming up with a down payment of, let's say, 20%. So that'd be 76,400. So yes, you'd have to come in with a little bit less down payment. But let's say your interest rate, instead of being at 6%, was at 7%. Okay. So now that 30-year fixed rate mortgage at 7%, your payment would be $2,033. So even though prices went down, but rates went up, your payment stayed about the same. Okay. And then the other thing I want to point out, and this I took from the National Association of Home Builders, and it said that, I don't know if you can read that very well. I'll make that a little bigger. It says, according to the National Association of Home Builders, every 0.25% quarter percent increase in rates prices out roughly 1.1 to 1.4 million households. So it affects affordability, and that's the whole thing we have going on right now is affordability. And but when rates go up, it takes people out of the market. Okay. And then Clark says, for president saying he wants to keep people's home equity high, doing everything he is doing is actually having people to reduce their price to sell. Of course, it depends on your market. Exactly. So, yeah, this is not this is completely counter to this is not a when rates go up, it decreases affordability. Okay. And, there's a political aspect of it. I don't think anybody's a fan of the regime over in Iran by any stretch of the imagination, but things have consequences. So, yeah, I mean, yeah, and that's, an important point too. And that is, the whole thing is how long is this going to last now? And if you look at history, throughout history, I'm kind of a history nerd. I like history, and I like, World War II documentaries and YouTube and things like that. But if you look throughout history, time and time again, they've thought wars would be, oh, this will be quick. And the enemy has a vote in that. So typically, I mean, look at our past with going into Afghanistan. Okay. That was 20 years. Look at Vietnam, so how long is this going to last? Who knows? Okay. But yeah, that's, and here's the other thing too. There's always opportunity in every market. Okay. And then, that monthly payment can really jump in an elevated property tax state like Nebraska. Yeah, your taxes go up right along with it. Exactly. All right, but we'll go back to the article here. Okay. Weekly pending sales. Pending home sales data provided a week-to-week perspective. Although results can be affected by holidays and short-term fluctuations, the last 5 weeks have been positive in our weekly pending sales data. We see that if that moves forward, especially now that rates hit a yearly high, they could continue higher this week. Pending sales usually take 30 to 60 days to hit the sales data. Typically, mortgage rates above 6.64% and breaking over 7 can really impact that data. Under 6.25% is where the sweet spot has been in the past several years, excluding short-term variables out of the equation. So some of this, it takes a while to take into effect. Okay. And this is pending home sales. And you can see how these typically follow a trend. So pending sales are up, compared to 24 and 25, but it'll be interesting to see if rates increase, how that will affect us going forward. Okay. Mortgage purchase application data. Purchase application data is a forward-looking data line. The growth here leads home sales roughly 30 to 90 days out. And last week, we saw a 12% year-over-year growth with 1% week-to-week growth. Weekly growth cooled last week, and this week we are at risk of a negative weekly print. This does not happen often when you have back-to-back weeks of rising rates. For this data line, I really value is the last 12 to 14 weeks of positive weekly growth. If you get this alongside year-over-year growth, we have something legit for sure. For 2026, every week has shown positive year-over-year growth. The week-to-week data has been positive. However, that's easier to do with rates under 6.25%. So with this chart here, mortgage purchase applications, those are buyers applying for mortgages. All right. Mortgage purchase applications are up. But here's the thing too, going forward, that may pull back as rates increase. Okay. And then he goes on to talk about the 10-year and mortgage rates. In the 2026 HousingWire forecast, I anticipated the following ranges. Mortgage rates between 5.75 and 6.75%. The 10-year yield fluctuating between 3.8 and 4.6%. When the Iran conflict started, sorry about that. My phone went off. I thought I turned it down. When the Iran conflict started, I talked about how I would be shocked if it continued past March 21st because of the economic implications of war, including higher energy and input costs. Friday, March 20th, the bond market took the conflict more seriously, and for the first time since September of 2025, the 10-year yield closed above 4.31%. The bond market has now priced out all the rate cuts and is now pricing in a rate hike in 2026. Now, this is the 10-year Treasury yield, okay? And you can see back in February 27th, where it was really low, is at 3.96. And now look at the 10-year Treasury. It's at 4.39. So that 10-year went up. And what have mortgage interest rates done? They went up as well. All right. Okay. I'm keeping my keyboard shut. Okay. MH08 is calling me. Okay. All right. So that's the 10-year Treasury yield. Okay. Now they have a thing called, what I want to show here is where they talk about the spreads. Okay. The spread is between, let me make sure I'm sharing it here. Okay. This is why rates are lower than they would have been if this would have happened a few years ago. rates would even be higher than 6.5%. Okay. This is the spread, which is the difference between the 10-year treasury yield and the 30-year fixed rate mortgage. So you can see in 2024, in March, the spread was at 2.57%. Hopefully you can see that okay. Then in 2025, it got a little bit better, is at 2.33. And now it's at 1.97. Okay, so the spreads being better has kept mortgage rates lower. Okay. And this week, the key to me because we have a clear pathway to the 10-year hitting 4.6%, the high end for my forecast. If this conflict continues and worsens, bond yields will rise and more rate hikes will be priced in. And then now he talks about mortgage spreads. Mortgage spreads remain a positive story for 2026, reducing mortgage rate volatility and are close to normal levels. Mortgage spreads got slightly worse when bond yields were falling in February, as the spreads were trying to make mortgage rates less volatile with falling yields. Now they have gotten worse with this conflict as well. For now, spreads are still very positive, but their improvement is the only thing keeping rates from being over 7% again. Okay. And again, you can see the chart there where it's the lower the spread, the better. Okay. And Connor's tuning in. So Connor says 100%. All right. All right. Historically, mortgage spreads have ranged between 1.6% and 1.8%. Last week's spreads closed at 1.97. Again, Friday's single day spread is not accounted for in this weekly data. However, I wanted to show you this week's rates relative to the worst levels of the spreads over the past 3 years, with the 10-year at its current levels. So if we had the worst levels of mortgage spreads in 2023, the mortgage rates would be 7.67%. Today, not 6.53. If we had the worst levels in 2024, mortgage rates would be at 7.29% today. And if we had the worst levels of 2025, mortgage rates would be at 7%. So it could have been a lot worse. Okay. Weekly housing inventory data. Okay. Housing inventory should now be sitting at its annual seasonal increase. However, the growth rate of the inventory has really slowed from last year's peak levels to the point where we might see some negative year-over-year prints in our weekly inventory. Still, this is far from the unhealthy levels of 2021, 2022, and 2023. That's when there was no inventory out there. Okay. And you can still see that weekly inventory change, March 13th to March 20th, inventory rose 697,251 to 705,633. Same week last year, March. Oh, I'm sorry. I get going, guys, and I forget to. I need to have a producer. Sorry about that. We was reading and I wasn't even on the right page for you. So hopefully what it's saying is inventory has been increasing. Okay. And new listings data has been slightly disappointing this year. I still believe we can get a few weeks over 880,000. The year over growth has been slightly negative for weeks now. I'm still hoping for new listings data to range between 80,000 and 100,000 per week during the seasonal peak periods, as it did from 2013 to 2019. For context, during the housing bubble crash, new listings ranged from 250,000 to 400,000 per week for several years. Okay, so we don't have new listings skyrocketing to the market. All right. Okay. And And Christian Bowman's tuning in. Good evening, everyone. And then, okay, thanks, Clark. I appreciate that. All right. Price cut percentage. Typically, about 1/3 of homes undergo price reductions before they sell, reflecting the dynamic nature of the housing market. As mortgage rates and inventory rise together, the percentage of rate cuts increases. In my 2026 forecast, I had a negative 0.62% call for the year nationally. However, mortgage rates were lower than I thought they would be at this start of the year, and FHFA's announced purchase of mortgage backed securities pushed mortgage spreads lower than what I expected. I believe we would see improvement later on in the year. So before the conflict started, my forecast was looked wrong for 2026. Now, if rates head higher and stay higher for longer, I do have a shot of my call being more correct. Still, the price cut percentage is below last year at this time. Okay. And those are percent of properties with price reductions. There's always going to be folks out there that there's only one reason why a home doesn't sell, and that's because of price. Okay. And you might say, well, what about marketing? Well, marketing is part of price. Okay. But there's always going to be sellers that have to reduce their price in order to sell. Okay. And this week ahead, Iran. Nothing matters this coming week but Iran. Last week, we broke a key level on the 10-year, and the entire calendar year is now being shaped by higher rates, higher inflation, and no rate cuts. In fact, rate cuts are now back in the discussion for 2026. If the conflict gets worse, we can get more rate hikes priced in for 2026. And no Fed member will talk about rate cuts unless we go into a hardcore recession. So for now, the Iran conflict is shaping what is the rest of 2026 and will look like for the economy and the housing market. Okay. I wanted to just cover that article. Okay. And then again, this is I'll make sure I'm sharing the right tab. This is the 30-year fixed rate mortgage going from 6 up to over 6.5%. Okay. And then on the I wanted to share this as well because there's talk of the Strait of Hormuz being shut off, and what is that doing to the price of oil? Well, February 26th, a barrel of oil was $65 a barrel. Well, then what happens? The war kicked off, and now it's overnight, really close to $90 a barrel. So whenever oil goes up, what does that do? That's inflationary, and so it raises the cost of everything. So that means it takes more dollars to bring goods to market. So when they deliver that lumber, all of that affects the price of the house. So when oil goes up, that's not a good thing, which almost makes me wonder that, when they bought back those the mortgage-backed securities right before the war started, I wonder if that was planned in to try to lower it even more before the war started. You wonder if they knew well before the 27th that they were going to do this. So you wonder if they did that as ahead of time, to help rates along. But I mean, let's see what anybody else. Just wanted to let them know where I hid the acorns. You know how I love trees. So yeah. MH08 is always threatening to come over to my house and plant some acorns. in my front yard. So, oh, that's funny. And then Clark got a kick out of that. That's funny. All right, and then let's see what else do we have here. This is that could definitely be one of the reasons why they bought those mortgage-backed securities. Um, it's there's always a reason. Nothing's done in isolation, and they know up front what's going on. Um, you know, but yeah, that this is the inflation rate. But um, if we didn't have, chaos is not good for a market. Abhors chaos, and you add wars into the situation, that's adding more chaos and everything. And if this drags on, and it's an election year, so um, we'll see how that pans out. This right here is the United States inflation rate. Now, this is for February, so the March numbers are not out yet. But when you have gas prices going up, what is that going to do to inflation? That's going to increase inflation, and um, that's not good. So yeah, that's one of those things. And then let's see here. What are you guys' thoughts in the chat? Do you think, just out of curiosity, I mean, no, we're not all geopolitical analysts or things like that. How long do you think the war will last, in your opinion? How long do you think it'll go on? You know, and then not if you take out food and energy prices. Yeah, I mean, yeah. So energy, that's yeah. I mean, and you look at the price of food and stuff. Sometimes I'm shocked. I was at a gas station. I was going to go. Dawn, my wife was like, not wife is watching this, but I was like, I was going to grab a candy bar, but it was like $2, and I'm like, holy smokes! I'm like, I didn't grab it. I'm like, man. Clark says 2 to 3 years. Yeah, that. Ugh. Yeah, I hope you're wrong, Clark. Yeah, that. I mean, but you know what? Here's the thing, though. Look at Russia. That thing is, and it's hard to. Yeah, 2 to 3 years. My range was. I was thinking 3 to 5. All right. Wow. I hope you guys are wrong. I mean, and how many, you can bomb somebody, but at some point, I mean, Hitler tried to do that to Britain in World War II, and that didn't work. So you can't. Yeah, it's hard to, at some point you got to occupy ground. So we'll see. Yeah. I hope you're wrong too. Yeah, I agree. Who knows now. But time and time again, you guys are, but how many times have, when we was in Iraq, after we when we went into Iraq in 2003, that thing escalated 2 or 3 years down the road. So how long were we in Iraq? And so that's wanted to share something else here too, and that was I might have shared this before, but U.S. housing returns since 1950. Okay, let me share this. Bring this to the stage here. So I might have shared this before. Yeah, we're still in Iraq. Yeah, I mean, yeah, that. And we were planning to go into Iraq well before we were in Iraq, because I remember back in the day, um, in the late '90s, when I was in the Marine Corps, we were always game planning that, So they game plan that, but yeah, that's um, and will the Iraqi people rise up and take back their government? Now, here's the other thing too: if they do rise up and take back, what replaces it? So who knows? So it's a mess over there. It's always been a mess. Yeah. Um, but this is U.S. housing returns since 1950. Okay, because I still have folks. But let's look back. Okay, you had the Korean War in 1950 to 1953, and the crash. The crash is coming. Oh, geez, yeah. Interesting story. I read something that I don't know if you guys. You're probably not as much a housing nerd like I am, but maybe you are. You're on the screen, so you have to be somewhat of a. um, Even this is overall housing market, but I don't know where I was going with that. But I still have folks saying, "Oh, the crash is coming. The crash is coming." Now, on an individual market, could it very well? Can you take a hit? Absolutely, but um, overall, when like MH08 says in Denver, it's definitely coming down. So you can have an individual market. Omaha is not one of those markets. We are kind of slow and steady and kind of boring, and we're the Midwest, and so we don't get the high highs and the low lows. It's not like we're, you know, um, a big, it's not like Phoenix or um, in a Phoenix market or a Las Vegas market. Okay, we don't get invited to the party, so we don't get the hangover. But overall, this is housing prices going back from 1950. And if you look at some of the wars that we've had in the past, you have the Korean War from 1950 to 1953, and housing prices still went up during that time. And then you had the Vietnam War from 64 to what was our involvement was 73, and all during those years, okay. And in the late 60s, I mean, there was plenty of chaos in that market, but home prices still went up during that time. Even during the oil embargo in the 1970s, and we had some of that wild inflation in the late 1970s, home prices went up, but some of that inflation is reflected in the home prices. But 78, 79, 14% in 1977. So you had home prices went up, and then you had the early 1980s when Reagan took office in 1981, and when interest rates shot up to 18%. Okay, think about that. Mortgage interest rates at 18%. Even during that period of time, home prices still went up. Now in 82, they only went up a little over 0.5%, but they still went up, which is unbelievable. But a lot of that, folks, is because think of who was buying homes in the early 1980s. It was all of the kids from the baby boomers were coming of age during the 1980s. So after the World War II, you had the baby boom, and those kids born, from 1946 to 1960, or I don't know when the baby boom generation ended. I think it might have been 64 or 65. But all of those kids were coming of buyer age in the 1980s. So even though we had outrageous interest rates, okay, we still had positive interest. We still had the market go up during that time, which is, to me, pretty remarkable. Um, and then Reagan tried to get Volcker to lower rates in the 1980s. Yeah, but um, they always want the Federal Reserve chairman to act independently and not be, uh, you know, everything else is political in there, but um, hopefully the chairman of the Federal Reserve acts in the best interest of the country and not the best interest of the president. So MH08 says 1964 for the baby boomers, so 46 to 64. But all of those kids were coming of age in the early 1980s. So that was demand, and that's going to increase prices. All right. Every school I went to closed 3 years later. Okay. All right. But, and then in the 1980s, and then in the 1990s, okay, 91 and 1990. I guess in the 1980s, we had like Grenada. We had some, I don't know what year Grenada was. It might have been 83. But 1990, August of 1990 and 1991 was the first Gulf War, and home prices decreased then. Oh, okay. History does repeat it, but it alters a bit. Yeah, absolutely. Yep. Thank you. Panama. Yep, Panama. So, but I think that was home prices going down then. I think we had the savings and loan crisis back then. And then in 2001, of course, we had 9/11, and then we had the Afghanistan and Iraq. Price. Of course, we had the Great Recession, and this is what has burned into everybody's mindset. Okay, but again, we had super low. We had high inventory. Like in our own market, we had over 6,000 homes for homes on the market. Yeah. MH08 is a student of history, the Keating Five, the Contras, memory lane. Yeah. Okay. All right. Exactly. So, but we had, even during the Great Recession, we had a 12% in 2008. That's the overall market. Now, you could have had some markets that, hey, they could have dropped off like crazy. But overall, 2008 was the, worst in the last 75 years there. And that was down 12%. Okay. And then the dot-com bubble in the early 2000s. Yep. But look at the 2004, 2005, 13%. I mean, we had some years where they gave a little bit of that back in 2008. But overall, here's the thing too, and that is, people have to live somewhere. Okay. And demand is softening, of course, because rates are higher, but there is still demand out there. There's plenty of people that want to buy a home, but they just simply can't because of where home prices are and where interest rates are. So that's where we're at. And MH08 says, I can see the old Silverado building from my office. All right. So I want to look over my notes here. But I thought you guys would find that interesting. In my notes, I'll have demand has not collapsed. Buyers didn't disappear. They just got more selective. So when rates go up, buyers get more selective. Interest rates, again, this is that going back to the how rates, when rates go up even just a little bit, how it pulls buyers out of the market. And then you know, interesting. I'd be interested to know in the chat, where do you guys think, do you think, um, where interest rates will be? I mean, how long the war will last? You guys say 3 to 5 years, you know, where do you think interest rates will be? So do you think we'll go over 7% on interest? I hope not, but who knows what'll happen. Um, uh, and then again, I don't foresee, at least in the Omaha market, I don't see, a crash or anything like that. But I do see a picky buyer's market where buyers are going to be selective, and then buyers are going to ask for repairs. Okay. This is kind of a side angle on that. And that is, when you're selling your home, my first guess out of the box was 7.1%, and that could very well be. Yeah. I mean, um, uh, you know, yeah, interesting. Yeah, no. This is going back to looking back at my notes here. If Sam says 6.7 for around that range, that could be. Clark says, I hope we don't hit 7 or go higher, but if things keep adding on, we can. Yeah, I mean, and here's the thing too: if they try to end it prematurely, and you got to make sure that there's. But again, here's the other. Even if they stomp out everybody over there, who's going to take their place? So that's, time will tell on that. But yeah, hopefully the CIA people are probably working overtime on that, I'd imagine. But who knows? You just depends on job reports and other, more than just the war itself. Absolutely. Yep. So yeah, and here's the other thing. There's always a reason why you shouldn't buy a home. Yeah, don't hit a hornet's nest with a bat. Yeah, that's that's a good analogy. Yeah, that's definitely a hornet's nest. And yeah, that's a good point. I think, what does it mean for sellers in this market? And this applies to sellers in any market. And that is, number one, you can't overprice your home. Buyers are going to have less room in their budget. Condition and pricing matter more than ever. So it matters in any market. In terms of buyers, the market's not crashing. The market is rate driven and fragile. Small changes in rates equals massive changes in demand. And the market doesn't move slowly anymore. It reacts fast. So you definitely see that with the 10-year. The 10-year reacts fast. The housing market isn't broken, is just extremely sensitive, and right now interest rates are calling the shots. So yeah, that's I wanted to bring up, we got a few minutes left. I wanted to talk about something here. I thought, well, if we don't have time, if I go through that article, what else could we talk about? So I thought, well, let's go to the wonderful world of Reddit, okay, and see what's some folks on Reddit say. So we'll say, what's something, and I just pulled this up at the last minute. I mean, honestly, I was kind of prepping for things. You could probably tell about 10 minutes before, but honestly, up to the last minute before the stream started. But I'm like, what's something else I can talk about? So I'm like, well, you know what? I'll pull up Reddit and see what's going on in the world of Reddit in terms of real estate. And somebody had a question, and this is kind of like, I don't really, first time home buyer 4 months ago. And I read this first thing and I'm like, oh, you know what? That's going to be the first thing I talk about. And then What's something you wish you'd have known before buying your first house? Okay. I'm starting the home buying process and trying to avoid major surprises. What's one piece of advice you learned the hard way? For me, I've always heard to get a separate sewer scope inspection. You'd think I'd had dug for weeks to find this. I didn't. It was right on top. Um, not just a general home inspection. What's your wish I knew that tip? Okay. Um, all right. We have Marco Castro. Hello, David. First time joining your live. Glad to be here. Well, Marco, thanks for joining us. All right. Um, let's see. I lived in this house 14 years before buying it. I knew pretty much everything about this dump. Okay. Okay. What's anybody else in the chat? What's one thing you'd wish you'd know before you buying your first home? If anybody wants to chime in the chat, let's hear what some folks had to say. Okay, these doubt 9268 says you need a bunch more liquid cash up front than just the down payment. Make sure it makes sense for you. Also, keep in mind that your mortgage includes more than just your mortgage. Lastly, always, always, always get a thorough inspection. Okay. I think the conclusion from this subreddit should be not to buy a home. Do I listen to 1110 KFAB? I used to, but not anymore. But why is that? Ethan Jones 275. What is? Do they? Am I that? I mean, I used to. I mean, I used to quite a bit, but not anymore. I listen to Spotify because it plays my favorite tunes. I used to listen to KFAB when I was a driver. Yep. Okay. Ethan Jones, I'm just curious as to KFAB. Why? I don't know. Anyway, I used to, but not anymore. Not as much anymore. 100%. I closed a few weeks, and the extra 12,000 I had is much needed cushion. There's so much that you might not account for, especially example furnishing the home versus your meager apartment furniture. Tools for do-it-yourself stuff like a ladder, power tools, shovel, lawnmower. Also bills for stuff like electric, gas, internet, water, and trash. Basically, don't blow your savings on the down payment. You need the money, especially your first few months. I 100% agree with that. All right. And then Connor says Jim Rose and Gary in the morning. Okay. Yeah, says he can't operate his car radio now. Trust me. And that is 100% fact. Okay. I took my car into get the oil change, and they gave you a little loaner car. And for like half the day, I had to listen to the Spanish channel because I didn't know how to figure out how to do the radio. But that is 100% true. Yeah, I couldn't figure. I couldn't. No, I'm getting better. I mean, but yeah, that is 100% true. Sam is 100% right. Let's see. I'm not from Omaha and was wondering if it was popular over there. I'm more in the middle of the state, but I like it. Okay. Yeah. Nope. All right. Excellent. Okay. Yeah. No, well, we're glad to have you tuning in, Nathan. So thank you. And then Clark says, definitely always have money in reserve just in case things pop up, because they will pop up. Yes. When you do an inspection or any inspection, it is meant to decrease your risk, not eliminate it. Okay. So then, and it's a visual inspection and it's a snapshot in time. So it can definitely change. All right. Clark got a kick out of that. Okay. And then KFAB beams right into Denver at night. Radio has become so homogenized. I'm not how to say it. I'm not sure how you say it. These days, I'm listening to CJME out of Regina, Saskatchewan. It's a nice break from U.S. media. And that'd be interesting to see on that. Yeah, that's yeah, but Sam's right on how to work my AM radio. But yeah, that's I'm usually listening to, on Spotify where you can listen to podcasts and things like that. I like to tune into that. Let's see what else it says here. It says I closed on my house last week and I'm already $16,000 in repairs and renovation. Just thankful I paid off my debts and saved up a ton beforehand. Yeah. Like tens of thousands beyond the down payment, closing costs, moving costs, inspection fees, earnest deposit, low appraisal contingency, repairs and upgrades, et cetera, et cetera. And then it says, don't watch HGTV. That might be some truth on that one. This is 100% true here. Okay. Mr. Worldwide, MH08. Yeah. All right. This crack sandwiches. Okay, sandwiches. Says all those products you want to get to, you won't get to. Not for many years. If you're buying a place with the intent to change that bathroom you hate, be prepared for a decade of using that bathroom you hate. The bamboo is going to take months of digging to defeat, and it will be back. Don't assume that you'll finish the massive amount of do-it-yourself until you enjoy, unless you truly enjoy do-it-yourself. Exactly. She says, "Is this my husband?" Okay. The possibility of being house poor in your first year or two, the stress doesn't end with the keys. That's true. That's why there is pizza, comfort food for the unprepared. Let's see what this. Get in the attic, in the crawl space, in the foundation. Look at the breaker panel and get good pictures of it, especially if it's an older home. Some of those older panels can be particularly dangerous. Federal Pacific, Zisco, and some Challenger. If you see issues in the crawl space or basement, get a structural engineer. Yes, some people will say that's being alarmist, but getting a professional will provide you peace of mind and potentially save you thousands. And that's, like in our market, you have a period of time to do any and all inspections. That can include a sewer scope, that can have a roofer come out and look at the roof, an HVAC professional coming out looking at the furnace and AC unit. If you're a seller, be proactive and have like the furnace and HVAC system serviced before you put it on the market. Okay. For any big problems, generally electrical, plumbing, and structural, get a contractor out there to give you a quote. This will give you a much better idea of how much that house will actually cost you and can be helpful if you ask for concessions. If your offer gets accepted, schedule all of your inspections ASAP. Quick, pest, home, sewer scope, and structural if needed. This will save you and your agent a lot of stress. Try to schedule quotes so they happen a day or two after getting the inspection reports back. Also, single-strand aluminum wiring is a big red flag. Multi-strand aluminum is typically not a concern. Structural issues include, but not limited to, owners taking out load-bearing walls, water damage, water infiltration in the foundation, joists that have been sawed through, columns that look like some idiot took a hammer to, improper supported addition, leaks, cracks in the foundation. Not always a bad thing, but never a good thing. Vapor barriers that are approximately 2 mil thick and completely useless, poor grading around the house. This person pretty much sums it all up. Okay. And it says get a really good flashlight, crawl around the basement crawl space yourself during the walkthrough. Found out our minor water issue was actually a small indoor swimming pool situation that somehow got missed by the inspector. Also, budget way more for the first year than you think. Everything breaks at once, like the house knows you're broke from the down payment. That is true. So, um, yeah, I think Sam's right. Uh, this is like how to talk you out of come to this stream to get talked out of buying a home. So let's see. Sam Darnold Gazer. So I love you, David. Okay. Well, thanks, Sam. I appreciate that. Okay. Okay. No matter how much you prepare, there will be major random surprises that all depend on money. Yep. And then this is David Say 16 says this is a small one. I'm reading these live, so maybe I should have read them up front that way in case something crazy they say something crazy, but I'm not. This is a small one, but don't paint straight away. Let yourself live in the place for a while and get used to the place. See the light from the windows at all times of the day. Give yourself some time to breathe between the purchase, move in, and when you start making big changes. I think that's solid advice right there. Let's see. I was big on budgeting and having everything in control, but if the budget got tight, I just always spent less. After I bought a house, some repairs just couldn't wait. I have more liquid assets on hand for emergencies. After a couple of years, make sure you know how home equity loans and lines of credit work. Don't plan on using them, but know how they can help you if you end up with a large repair bill like a roof. Yep. And sometimes and that's age of the roof is a big deal in our market because if it's over 5 years, you may not get full replacement coverage. And it's not if the roof will be bad. It's you're going to get hail damage because we get hail like crazy around here. So in 2 years, 4 months in my mortgage, here's what I did. I had 29% down payment, $535,000 for a home. I've been saving years ahead, so this is critical. Have enough for down payment if possible. Have more for after closing for moving. Best to have a partner to do the mortgage with. Owning a home solo is risky at best. Yeah, and then believe it or not, there's more single women that purchase homes than single men. So that was a thing that came out of the NAR research. But most buyers out there, because it takes two incomes in order to purchase homes in today's market, research, and know what the process is in and out. Anything about the mortgage process, you should shop around for a good lender. There's nothing like a starter home solo. Be sure and buy the house with the end in mind. At the end of the day, it's only a small portion of the bed and room you can occupy at any one given time. Yeah, your first home is going to be a stepping stone. It's not going to be the most ideal home out there. Let's see. David would love to have a tree in the front yard. Closer to the sewer line, the better. Helps keep the tree going. You know what? Oh man, that is awesome. Yeah, and I know people love trees, but if you've been on the stream for a while, because here's the deal. Then you got to rake the leaves. Okay. After they rake the leaves. Okay. Then you have to trim back the tree branches from the roof because you don't want the tree branches brushing on the roof. And you don't want the tree roots to create an uneven cement, and then there's a tripping hazard. So what else is you get a little bit of shade, but then then the leaves fall in the wintertime. It's they're all there's no leaves on the tree, so yeah. And then when you cut the tree down, you got to get rid of the tree stump, because then all of a sudden termites are going to eat up the tree stump. Okay. Save more than what you think you need. Make sure you're looking for the major systems of the house: old HVAC, old roof, that sort of thing. Yep. Great place to store raked leaves is in the gutters. Yeah, I mean, if you got leaves in the gutters, then what are you going to have? You're going to have found the gutters are going to overflow. Then you have water next to the foundation, and if you have an older, there's two types of basements. There's basements that have had water in them, and there's basements that are going to get water in them. So when you have gutters that you have to clean, then yeah, I mean, so yeah, that's oh, that is so funny. All right, everybody. Hey, let's see here. Let me share this tab here. Be sure to the trees suck up the water. Yeah, from your sewer system. So be sure to give the stream a thumbs up, and if you're not subscribed to the channel, be sure to subscribe to the channel. And I changed my banner, so Sam is my new licensed assistant. So I'm excited to have him on board and helping me out. So that's exciting. And then we're over 7,000 subs. We're on our way. So if you don't mind subscribing to the channel, I'd appreciate that. And if you're interested in purchasing a house, reach out, and I'll put my number up there. And then we're also rolling out a new website, so stay tuned. You can actually get a sneak peek at it. Let me show you here. If I click on something, it'll play. But if you go to my latest video, you can take a peek at the updated site. Sam's been working on that, so I'm pretty excited about that. We're going to go live here. You know what we can do? We'll do it this way. I peeked at it last week, but we'll peek at it again. All right, and then this is what it looks like here. So this is the revised version. This is not the live version yet. This if you go to davidmatney.com, you can take a peek at it and stuff. But yeah, I'm pretty excited about that. It's my site because I don't have I should put a tree in the front a big tree in the front yard for that. So, but anyway, I'm excited about it. And anyway, that's about all I have tonight. Then Emmett Carroll says, Dave, I love the content. Excellent. All right. And then Emmett, if you ever decide, I'll be sure to get a referral from Jen. All right. Jen is a friend of ours up in Plymouth, Massachusetts. So yeah, she has a great channel for sellers. So tune it. She is very organized with her streams. I look at her stream. I'm impressive how she does her streams. So she does a fabulous job with that. So, and then we have Clark, the realtor from Atlanta. Let's take a peek here at, pull up Clark's channel here. Clark. Clark has a real cool avatar. So be sure to check out Clark's channel. Let me pull that up here. So share this tab. And there's Devon Clark. He's from Atlanta. So be sure to give old Clark a Clark's over 1,000 subs. So so be sure to check out Clark's channel, and he does a live stream. Clark, your stream is on. Well, I could say Sunday night, 7 p.m. Eastern. So you can tune into Clark on every Sunday night, 7 p.m. Eastern. It's always a lot of fun, a lot of good information on there. So, Clark, love having you as part of the program. So, anyway, gang, that's about all I have for this evening. So, Connor Irwin says, love the show. Thank you, Connor. And then Sam says, love the website. I do too. Connor says websites are cool too. So excellent. Well, anyway, gang, I appreciate everybody stopping by. And then, and Wednesdays when Clark does two streams a week. So yeah, but he's always at work. So yeah, but click out and check out the replay. So anyway, everybody, well, appreciate everybody this evening, and then you guys make it a great week, and we'll talk to you next week. Bye-bye.